Hello everyone, welcome to today's session of Market Snapshot. My name is Samson Mzera and we will be discussing what the week has had and what to expect next week. So just get straight into it. And if you can hear me, just say hi on the chat section. That'll really help in terms of my test. Anyways, let's get straight to this, and we will start with the most recent news, which was yesterday's speech. So I don't know how many of us have taken the time to look at that. Let's make sure my screen is okay. Oh yeah. Yeah, I think my screen is okay. Okay, so from FinViz, we are seeing a lot of news, especially on yields, government's borrowing, and the Middle Eastern tensions. But before we get to this, yesterday's session was a bit interesting in that it might be a turning point for what we've been seeing throughout the entire year. So yesterday, which was Thursday, at around 7 p.m. local time, Kenyan time, we had the Fed chair speaking in a conference. So if you go through this, it's actually a video. There are quite some interesting points to pick out. Let me see if I have it here. Yeah, there's a video here. There are quite a number of interesting points to pick out. So you can just go to Forex Factory and then just look for this video and try to watch it. But we will try to summarize it based on what we know so far. So number one, the remarks made yesterday were that the market conditions are restrictive. So when the chairman acknowledges that yes, the interest rates are too high, then that tells you something. So let's just go through this. Powell's speech yesterday was perceived as dovish. Dovish meaning they might be looking to be less restrictive, and that is usually not good for the dollar, and left the dollar a bit weaker. The greenback continues to draw smaller benefits from strong US data and high rate advantage than it should, likely due to its overbought status. But upside risks remain. So basically, yes, the US economy is very resilient, and now there's that argument of should it be bullish because now they might leave rates for longer, or should it be bearish because the chairman is actually acknowledging that we have raised interest rates too high. Remember, interest rates were what were causing the dollar to be very strong. So that might provide us with some hints on what to expect next. So markets have continued to receive evidence of US economic resilience, this time in the jobs sector. Yeah, so we saw this last week. However, the dollar weakened across the board after Powell said the central bank was trading carefully. Yeah, so you can see there's a clear tone in the language being used. Remember, initially it was very hawkish. That means we were still aggressive with raising interest rates, and that meant still a very strong dollar. But at the moment, that might not be the case. So we're still taking this with a pinch of salt, because we might not be necessarily conclude that yes, now it's time to start selling the dollar, but we are starting to have that shift in what the sentiment has been over the longest time. So this might be a turning point, as we have said. So if you look at the Fed watch tool, the market is actually pricing in that there's a very small chance. Now it's at 1.7. Early in the morning it was at 0. The market is pricing in that the probability of us seeing a rate hike in the next meeting is at 1.7. So most people are now a bit more settled with the fact that in the next meeting, we might not see an interest rate hike. And that is usually not so good for the dollar. So yesterday, this probability was at 8%. Last week, it was somewhere around 20%. Today, we are at 1%. Yeah. So this is telling you something. And the narrative is maybe the dollar is overbought and it might be time to shift. But again, shift against what? So you usually have to still be careful when you're approaching this. So that's for this. And then also, if you look at the December 13th meeting, still there is a slightly higher chance that there might not be any interest rate hikes. Remember, interest rate hikes is what dictates the strength of the dollar. And in this case, because you're seeing the likelihood of we might pause November and December, then it is making things very difficult or complicated. So two scenarios. We might either continue ranging with the dollar, or we might start seeing some weakness in the dollar. So those are the two scenarios that I think are more likely to play out. Going on to the yields, we're seeing that, okay, so this is a chart of US government yields. So the candlesticks are yields, and then the orange line is the dollar index. So you can see, if I zoom out, that the dollar index and the yields usually move together. And we've seen that after last night's, actually the better part of yesterday, some easing after this very strong trend. Remember, yields, 10-year yields usually make the dollar very strong, but we're seeing some easing there, and we're also seeing some movement downwards to the dollar index. So we've not printed any new high on the dollar index, meaning there's some sort of easing or cooling off in terms of the dollar strength that is happening. So now, if you look at this, you might start thinking, okay, now the currency is starting to weaken, yes, but it's going to weaken against what? So if we look at our list of currencies here, so I have a chart here with currencies, AUD, we have Canadian, Swiss franc, Euro, Pound, Japanese yen, New Zealand, and US dollar. So you can see the US dollar, which is this one here. I think this one usually takes some time to update, but if the expectation is true, then we might start seeing the strength of the US dollar slowly flattening or slightly dipping. And if at all you become bullish, where it starts strengthening again, there's a very limited upside. That means there's very little room for it to continue going higher. So that means one of two things. If I can find a strong currency to pair it against the US dollar, then I might have a very good trend. And you can see here, Swiss franc. You can see here, Swiss franc was one of the weakest currencies, and it immediately shot up. I think this was a week ago. We had this shooting up, and the reason why Swiss franc has been strengthening of late, of course, the Swiss franc is a safe haven currency, and usually in times of a global crisis, people tend to go for safety, and that's why people have been buying a lot of Swiss franc. So USD CHF has been in a very good trend because of those two factors. Number one, we might continue seeing a weaker dollar, and number two, if the tensions in the Middle Eastern part of the world continue, then that if you look at the chart of USD Swiss franc, you can, this is a daily chart. You can see it's been dropping for days. If I go to the hourly, we have this interesting downtrend over here. So if you're trading trends, then Swiss franc makes a good candidate for you to start trend following it going lower, because again, people are buying Swiss francs, and a tough spot in terms of will it continue strengthening. Having said that, we've seen for the first time since around last month, we've gone back to those lows of last month for Swiss franc. This is the 4-hour chart, and if I'm looking to trade this, then obviously I'd want to wait for retracements and then re-entries. So in this case, we have a market supply zone over here. The previous time we started selling was somewhere over here. So let me just color this. So this is if you're trading supply and demand, then that's how you'd want to follow the trend. If you're trading other trend following techniques, we do know that this is the other law that we'll be looking at down here. So in the event we continue seeing some strength in the Swiss franc, then we could find our way somehow down here. In case everything stays the same, that is in case we continue seeing tensions, and in case the dollar starts to become weak, then obviously this downtrend will continue. And you can see how Swiss franc likes trending in one direction for long. So in this case, if you're trend following, then this is a very good candidate to look for opportunities, USD CHF. Yeah. So again, you're trying to pair a very strong currency with a very weak currency. And in this case, not a very weak currency, but a potentially weak currency. And in this case, you're saying we might start seeing signs of dollar weakness, and the Swiss franc is very strong at the moment. So over the course of the next week, if you're trend following Swiss franc, then that might give you some good entries in terms of where to, if that is your trading, a trend following strategy. Yeah. So yeah, J Squad is saying treasury yields at 16-year highs are providing investment competition to stocks, with the US government bonds now offering risk-free yields. Yeah, so that has been the case all along, and that's why we've always looked at this chart. So if you, where is that? Yeah. So you can see, let's put stocks over here also. S&P 500. Yeah, like that. So you can see the blue line is stocks. Yeah. The blue line is stocks. The orange line is the strength of the dollar, and the candlesticks are yields. So you can see there is an inverse relationship. There is an inverse relationship. When yields go high, stocks tend to drop. And when stocks go high, usually that's when yields are going down, or the dollar even index is also going down. So you can see there's that opposite relationship. But we seem to have, going forward, it might be more complicated, because now we know that there is some sort of tightening going on, there's some sort of easing going on in the markets. There's some sort of easing based on yesterday's comments, but true to the case, we might remain at these elevated levels for long. These yields, remember, the bond market is the let me call it smartest in quotes, smartest market. Why? Because we have a lot of institutional investors there. So we usually just try and see how the bond yields are doing. Then now we gauge. If we see the bond yields are dropping, then we know stocks will start rising, and the dollar will also start dropping. Yeah. So we might have reasons to remain elevated because, number one, China has stopped buying, not necessarily stopped, but at least halted buying treasuries from the US. Same thing with Japan, because they're having their own issues and they're trying to fix their bond market. And remember, those are one of the biggest players in the market. If you look at Russia, they've been basically they're not there in the Western financial system again. So that might mean these yields might remain high. Remember, for yields to come down, people have to start buying bonds, US bonds. Yeah, and at the moment, that's not the case. So what I'm thinking personally is we might start to see the relationship between the yields and the dollar kind of break a bit. And that means we might start seeing yields remaining elevated, but the dollar sort of weakening sometime. So that's the more likely scenario, where this correlation, where if yields are going up and then the dollar is going up, might break a bit, because now you've seen that we've eased off, but yields are still going higher. But again, they might remain elevated because the major buyers in the market are not really interested in buying. If you look at maybe the Middle East, the Saudi Arabias and everything, and the other countries, then they're also not necessarily keen on having dollars to buy bonds. Usually, traditionally, you'd have these Middle Eastern countries, whenever they sell the commodities, that's oil, end up having you end up having dollars in the bank, and they usually just go and buy US bonds so that they can get the investments, return on the investments and the cash. But for now, even that is starting to cool off a bit. So we might see how this plays out. We might want to wait and see. But for the week, we know the obvious pair, Swiss franc, USD CHF, a very good pair. As long as the tensions are going on, that's a very good pair to follow, especially if you do not want to participate in gold, because gold is also saying the same thing. Okay. Saying voice in Akote. Am I audible? If you're in the chats, am I audible? If you can hear me, just say yes or hi. Okay, CMA watch tool is dictating a pause, which should cool off the rally of the dollar. Yeah, so that's another thing. If you look at the CME Fed watch tool, and this is what we started by saying, whenever this percentage here goes up, the dollar starts to strengthen. At the moment, we are at 1.7%. Last week, there's a week we are at 30%. That's when the dollar was really, really strong. I think that was last month, towards the end of last month. But now we are seeing it's gone all the way down to 1.7%. That means there is a very low probability of us seeing a hike in the next meeting. That means we might see some weakness. Again, we're not completely saying that the dollar is going to weaken just like that, but it seems the signs are starting to show. The clouds are starting to form. So that's one thing you need to go and look out. So yeah, we're coming to GBP USD, which is over here. So here it's saying we saw some rather soft UK numbers in the morning. So obviously there was news in the morning for UK, from the UK. Here they're saying retail sales came in lower than expected, but weak retail sales and a noticeable drop in consumer confidence. So this statement over here, though both are among the most volatile data releases in the UK. In better news for the government, borrowing was a bit lower than expected, which means that following some similarly brighter readings in previous months, borrowing is running roughly. So the UK government has reduced the cost of borrowing, and we are seeing some signs of things are manageable. Things are starting to look manageable. So if we go to GBP USD, based on that alone, so I just a bit. So this is GBP USD. This is the 5 minutes chart. Yeah. So the news kind of pushed. The news pushed GBP USD a bit lower. Yeah. But if you look at GBP USD again, you can see that we've reached at a critical level here. Yeah. 1.21059. That's a very critical level. So you might have a hard time going lower. Yes, the news came in bad in the morning, but does that change the bigger picture? It might not be that straightforward. It might not be that direct. But we've had bad news, now you have to sell GBP USD. So we might have actually a very hard time passing this level for GBP USD. However, if you want to continue playing this short, at least wait for this imbalance here to be filled. Yeah. If you want to continue playing short, that is, if you want to continue selling the market. For me, however, there's a high likelihood that because of the mixed data, we might see some sort of range over the next couple of days as we try and reduce the situation. So let's go to this currency strength meter for GU. Yeah. So you can see that for GBP USD, sorry, for the pound, it has been very weak all along. Maybe it's reached a tipping point and we might see it starting to cool off, but it's not very obvious that we should continue selling GBP USD. From a fundamental perspective, it's not that obvious. that you should start selling GBP USD. Yeah, something like CHF, you have a very solid fundamental reason. Tensions in the Middle East, Swiss franc is usually strong when there are tensions, threats of war or something like that. Yeah, or even the pandemic back in 2020. That is usually very obvious, but we don't have a very solid reason to say, okay, this chart over here needs to reverse. It's not very straightforward. Yeah. But then again, doesn't mean that we will continue going lower too much unless there's some other news that comes in. So there's a high likelihood that we'll just continue ranging around this point. And if we go lower, then it's a very limited downside, probably back to these areas over here. So it's very limited in terms of the downside. And the same thing goes with gold. Yeah. It's the gold and USD CHF. Gold and USD CHF are some of the things I will be looking at and monitoring in conjunction with what is happening in terms of the geopolitical tensions, because you can see that clearly both of these are reacting very well to that. Gold, for example, now there are two reasons why it's trending: geopolitical tensions, and number two, the fact that the slightly dovish comments from the Fed yesterday night are making this a bit more obvious as to what you need to be doing. So if you go to the daily chart, remember the other times gold went to 2000. The other times gold went to 2000, if I zoom out, was in 2020. We all know what happened in 2020. We all know what happened at the beginning of 2022, which is kind of the same thing with what is happening now. So you can clearly explain these spikes because of global crisis, and clearly that is what is happening now. So unless we see a major change in how things are being conducted with negotiations in the Middle East and all those things, then it's looking very likely that this will continue being an uptrend. Whether it's going to get to 2000, that's another debate. But it's looking very likely that gold will remain elevated as long as there are those risks. For example, you know that Iran, in the US was claiming US was saying it had intercepted some Iran, I don't know, missiles or something. So things are looking still very tensed. And as long as things remain tensed, this is going to continue being an uptrend because of what we have seen in the past. So this is just based on what we have seen in the past, where if there is a global crisis or if there is a threat of a global crisis, this is 2020, 2022, then we are going back up. And this was when the regional banks in the US were under a lot of pressure. This was early 2023. So we are seeing that pattern emerge almost every other year. Yeah, and that's why I'll be very careful trying to look for shorting opportunities in gold until we have something clear, until either the tensions have cooled off or maybe the negotiations are seeming to make progress, things like that. So two factors: dovish, slightly weak comments yesterday that were making the dollar weak, and the reaction in the market where you're trying to buy safe haven assets because of tension. So that's with this and USD CHF. Yeah. Let's go to another asset. I believe we've answered GU. Euro is slightly different. It's a slightly different case. You can see here that on the 4-hour, we are no longer in a downtrend. We are sort of at that tipping point where sellers are getting weaker and weaker every leg of selling. Yeah. So it seems as though we have this triangle formation. And if we are trying to spot places where the trend might turn, this might be a good candidate to monitor next week for any opportunities the trend will turn. But it's looking likely that we might even see a sideways market because trends don't just change easily. But if you look at, so let me just if you look at Euro, this one, you can see that we've had some sort of strengthening towards the start of this month. So hopefully if this continues, then that trend might actually be an uptrend now. Yeah. Okay. There's one thing I was looking at, and that was the indices. So this is bar chart, and you're looking at the put call ratios of, okay, just a minute. Yeah, I think this is better. Yeah, so we're looking at the put call ratio. So what's a put, what's a call? A put is simply, let me just call it a position where you're trying to see if the market is going to sell. So you're basically in a sell position, and a call is basically a buy position. If we oversimplify things, and you can see that the put call ratios, basically the ratio between sellers and buyers. So let me zoom this in. The ratio between sellers and buyers in S&P index, S&P 500, there are still more sellers in the market. Yeah. If you're trading S&P 500, also if you look at Dow Jones here, again, this one is also even more sellers than S&P. The ratio between sellers and buyers is 4-1. So that means there are 4 times as many guys in puts than in calls. And then Nasdaq, same story. Where's Nasdaq? S&P, yeah, Nasdaq here, NDX. Yeah, still have a very, in this case, it's 6.4%. So there are 6 times more sellers than buyers in the options markets. Yeah, so we will be monitoring to see if these numbers reduce, because you're trying to see if the market, from the news last night, you will try and see if the market is responding to it positively. And if it does respond to it positively, we could see a reversal in many of these indices. So if I go back to this, for example, UT 100, we could see a reversal in these indices like UT 100. So let me just remove this. Yeah, like this one. So if the data from last night starts to, if the market interprets that as positive, as in the dovishness is there to stay, then we might start seeing an upward stick in most of these indices like S&P 500. So in this case, I will be very reluctant to continue looking for sales in such a market. However, things need to be clear. So if I'm waiting for an uptrend, I have to see an uptrend in terms of market structure. So market structure or your technical analysis. Yeah, so basically in this case, let's see. Yeah, I have to be very clear, or it has to be very apparent to you, or very obvious that this is an uptrend. So this is another one that you can monitor next week for signs of a reversal. And if there is no reversal, then we'll probably just wait for it till it gets to the lower side of this range, of this channel. So you can wait for it either to get here or to start showing you that the market structure has changed. Then that's when you can know the market is interpreting yesterday's news positively, and indeed we'll start seeing the prices changing. So that's that. Okay, so I think we've covered the key points for the week that's coming. It's going to be a very difficult week because it's not very obvious, especially when things are shifting or things seem to be shifting. It's usually not very obvious to know the basic direction. So yeah, this was an article you're looking at. Geopolitical concerns continue to bolster Swiss franc. Then the singular resilient on Fed's post-Fed's commentary, but again, Swiss franc continues to dominate as the week's top performing currency, as the global financial markets are under the influence of mounting geopolitical tensions. We have already covered that extensively in the first minutes of this stream. Okay, I think that's it for today. I know it's a holiday, but the markets are still on, so I hope you've gotten some insights on what to do. and we will see how things unfold for the rest of the day. We don't have any major news coming out until Tuesday. So I've filtered out low impact. Maybe I can just add it. Okay, so we don't have any high impact news for the rest of the day. Maybe this speech, but other than that, there is nothing really intense for the rest of the day. So if you look on to next week, then I'd want to see data that's building up to that theme. So the theme is we might see dollar weakness. Now, if the US economy starts showing signs of weakness, that is, if these numbers start coming in lower than expected, both for the dollar, then that is going to drive more into that theory. And that's then is going to now make, if you're going to see a change in the trend, then it's going to be a bit more apparent when that happens. So for example, for an unemployment claim usually comes almost every, something like core PCE. This one you can try and look at it and see if it's coming in lower, or even the expectations when they come out. I think they'll come out either to Monday, I think, or Sunday. When these expectations come out, then you are able to know this new theme. This is that the dollar might start weakening. It needs factors to build onto it. It needs things to strengthen that theme. So if there is news that is against the dollar, then that's going to build up onto that theme. And that now that can make you find a good trend there, especially at the start of a trend. Having said that, again, thank you for attending today's session. I know it's a holiday, but at least we are here and the markets are moving. I hope there are no other questions. So for me, what are some of your, so for me, I'm going to monitor closely USD Swiss franc and gold. So for the better part of next week, while monitoring what's unfolding in terms of geopolitics here and there. Okay, so that's that. Again, thank you so much for attending. See you in the next Friday's session.